Let's welcome Vikash Singh, VP, ICICI Securities, and Peter McGuire, CEO of Trading.com, who joins us on the show. Hi, gentlemen. Good to see you all in. Well, Vikash, let's come across to you first. This, we just had the management of Coal India first. They said that academically, yes, it works. Gas prices move up. Internationally, coal prices will move up. But they say not necessarily that, Coal India will be able to go ahead and increase e-auction prices. Do you agree with the logic that actually coal prices could get a bit of a leg up?
So thank you, Nigel, for having me on the show. So if you look at the international coal prices, they're already up 10-11% in last couple of days. So, but then Indian scenario is a little bit different. Most of us get the FSA coal from Coal India, and many of the private players have got their own coal mine as well. So yes, the domestic coal price increase would be at a lag and at a much lower rate than what the international prices are. That's what we are expecting.
Okay, all right. And I think Coal India for you all is under restricted coverage. So you won't be able to comment on that, right?
Yes.
All right. Let's focus then on the aluminium play. The last few days, we here at CNBC-TV18 as well have been highlighting that there could possibly be a bit of a deficit because the GCC countries' capacity is coming under risk. Now we know that, in Bahrain, that capacity has been shut down. Also, in Qatar, because of Qatar Energy's JV out there, close to 650,000 tons are, put on standby. According to you, do you believe this aluminium market deficit will continue? And in terms, according to what you have projected, what kind of aluminium prices are you working with?
So basically, we had a slightly different view. We were among those people who were thinking that the 2026 aluminium market could be in slight deficit only, 100 to 200 KT only, not much more than that, because in the later half, Indonesian supply was supposed to come. However, currently, if you look at the Qatar, they have 0.65 million tons been closed. And Bahrain is not closed. Basically, the shipment has been halted.
Yes.
In case of Bahrain capacity is being closed, then the deficit would widen and the aluminum prices would continue their rally in the shorter term.
So what pricing are you working with?
So on an annual basis, we were working on the average price of 29.50 for the annualized basis. And in near term, we think the aluminium could touch 3,500 odd levels.
Peter,
Okay.
do you want to come in on where aluminium prices could head?
Yeah, certainly. Look, I think where we are at the moment, you're looking at the best part of 33.5. It's had a big run up, Rima, over the last matter of probably 6 to 8 months. I think that continuation, it'll take 3,500 out. I think that'll happen probably sometime this month, the way that it's having the up leg. You've got to go back to, maybe about 21 when we're at 38.50 was the last high of the last 5 years. I'm not suggesting you're going to see that, but probably 3,600 is where you've got to say a line in the sand. And I'm looking for two things. I'm looking for horsepower to get there and momentum and the impact as far as supply issues. And as Manisha highlighted, all of that fabric needs to be washed through the market. And that's naturally, I think, going to force prices higher from here.
Peter, China has cut the annual the annual economic growth target to 4.5% to 5%, and this would be the lowest since 1991. The target was released during China's 2 sessions political meet, and it's on account of issues like weak consumption, property crisis, trade tensions, energy crunch. Now, if China grows at 4.5% to 5%, it's going to have an impact on the entire commodity basket.
Well, it will to a certain extent, Rima, and there's no doubting that. I mean, we understand it'd be great to see them at 6s and 7s, but they've had their time in the sun, and there are other markets that are growing very, very strongly. India, for example, and a lot of Asia. So as the market, I think, inhales China's positioning, and we understand from the overbuild as far as the property sector and the economic situation there are still many markets that are producing and performing very, very well. You only got to look at South America and, of course, Africa. So the pricing, I think, for some of these base metals or industrial metals are going to see a leg up over 26, and the overall momentum is going to be relatively strong across most of the commodity sector. And I think cheaper energy prices will be here once we get through this situation, but that's going to take a matter of weeks until this comes to some sort of conclusion.
Okay, all right. Coming back to you then, Vikash, from the aluminium basket, what do you like? Because various theories are playing out. Who's going to be the biggest beneficiary? For NALCO, they'll gain on high aluminium prices, and they are mostly, more than 50% of the coal supply comes in from captive sources. So they'll gain. But alumina prices could be weak. The other argument is that, Vedanta, it'll gain because of higher aluminium prices, higher oil prices, and they're working on backward integration. While the final argument is that Hindalco could actually be basing out. Novelis things will improve, India operations will improve. Among the three, which one you like?
So our preferred pick is still Vedanta, but if you just talk about the recent aluminium rally, then NALCO would benefit more than these two other players.
Okay, all right. NALCO will benefit in the near term, but Vedanta, you have been positive on it, I think, from 400 rupees or 350 rupees. Do you think now it's peaking out? What is the target price you have on Vedanta?
We have a 850 rupee target price on Vedanta.
850 rupees. Got it. All right. Because yesterday steel stocks were very, very weak. My internal team as well was asking. I didn't see any brokerage notes as well about it. I think it was routine profit taking that we saw yesterday and fears of demand destruction. Any reason that you could attribute to the weakness we saw in yesterday's steel stocks? All of them were down, I think, 3 to around 5%.
Yeah, so like you mentioned, some of the profit booking, and one other thing is that the DXY was strengthening. So dollar index strengthening usually have a inverse relationship with the commodity prices. So the demand, apart from the demand destruction, that was the another factor, which probably would have taken to the steel prices lower.
Okay, all right. So you're saying it's routine profit taking. Would you buy any of these stocks? Tata Steel came down by a great extent yesterday. Jindal Steel, out there, they have valuation comfort. JSW Steel has gone on with a value unlocking as well. Or SAIL could be favorably placed. Among these four names, what do you like?
We still like Tata Steel more than the rest of the three.
And what is the rationale over there? They still have a huge debt. The Europe business is still in a bit of a tizzy.
So Europe, basically with the CBAM getting implemented, we are expecting the Europe would improve significantly. In UK also, there is a price hike which they have taken recently. And domestic business, which is their main bread and butter, we are expecting domestic demand to be pretty strong. Mind you that 2029 would be the next general election. And usually the couple of years ahead of the general election seems to be a very good on the steel demand side. And we have a safeguard duty in place as well. All these factors should continue benefiting Tata Steel for the time being.
So Tata Steel and Vedanta, your top picks from, the frontline names from ferrous and non-ferrous. And the smaller names, you like anything? Some of these ancillary stocks, graphite, or we had Sarda Energy earlier today. Any of them you like, Vikas?
So without rating, I would refrain from commenting on those.
Okay, got it. Thanks, Vikas, for joining in. But Peter, let's come across to you. All that glitters is gold again. Gold has been perking up, silver has been doing well, but silver has come off drastically from the top. What's the outlook on these precious metals?
Well, Nigel, I think, we're no doubt, let's look at gold first off, and over the last couple of days, we've seen it move from that 52 handle all the way to 54. It's back at around 5,200 at the moment. I've got 5,190 on the screen, or 91. So it's very volatile. We understand that. And also, silver's come under a big hit from that high of 121 down to that mid-70s, now at 84. I've got around about 84, 84 and a half. So, yeah, about 84. So 85. So the situation, I think, is going to be, one, it's consolidating. They will move higher. US dollar index around that 98, sort of 99 handle. And I'm expecting precious metals to have another leg up. And this month, I think that they'll do that. Though I'm not suggesting silver will take its all-time high out, but I feel as though gold's got the capacity to do that, and probably 55, 5,600 sometime this month.
Thanks a lot, Peter, as well as Vikas, for joining in. Interesting times for the metal stocks, metal prices as well. And Peter, you want to wish us luck?
Yes, absolutely. You're playing England tomorrow. I think you've got that one in the bag. That'll be a great game. I wish I was there in Mumbai sitting next to you watching it. The next one, you're up against New Zealand. I'm flipping the coin, but you're going home as the winners. I think that one's in Ahmedabad.
Thanks a lot for that. This evening, actually, we play England at Wankhede, and I would love you to join me at the stadium. But you're saying that we're going to lift the cup and maybe we do what we did in 1983. We beat England, I think, in the semi-finals out there. And then we lifted the cup. So Monday morning, hopefully, celebration times for Team India.
Celebration, you'll get two. You'll knock the ball out of the park, figuratively.
Oh,
Lovely. Thank you. Thank you very much, Peter, for joining in.